Good afternoon, everybody, and thank you for joining us. On behalf of the Commonwealth Bank of Australia, I would like to extend a warm welcome to everybody who's dialed in from all over the world to join us for this afternoon's stream of the Regtech Association's preeminent annual event called Accelerate Regtech 2021. Now, for those of you who I haven't met, my name is Jesse Arundel, and I currently lead the emerging technology team here at the Commonwealth Bank of Australia. And what my team is really set up to do is to help accelerate the bank's adoption of new and emerging technologies. One of the areas of great interest and personal passion of mine that we've been focused on for close to 2 years now has been Regtech. So I'm incredibly excited this afternoon to be able to welcome you all to what I hope is an exciting afternoon of presentations, an amazing pitch fest that we have lined up, and some excellent Q&A sessions. Now, before we dive into the content for this afternoon's session, there's a few housekeeping items that we have to go through together. I think, as you all know, and as you all have guessed, this year's event is 100% online and virtual, which I think is incredibly exciting considering the sheer amount of people that we can reach within the event, and also the fact that we can get people from regulated entities, regulators and startups and technology companies from all over the world joining us here to talk about the future of regulatory technology and innovation in the financial services industry. I think for those of you who haven't, I'd highly recommend downloading the app for the event that allows you to connect into the Regtech Expo City, where you can connect with other like-minded individuals and kind of understand and see some of the potential solutions throughout the market that are part of the Regtech Association's member group. And I think that's a great opportunity to connect with other individuals and like-minded peers. It's also a great way to stay on top of the program for this afternoon's event. I think in terms of the interactivity for this afternoon's session, we're going to have a few polls. We're going to have active Q&A sessions. I'd highly recommend for those of you online and watching with us to use the comments functionality. We'll be reading them where I can throughout the afternoon. We'll be injecting those questions into the sessions that we have with all of our presenters. So please, let's keep this afternoon virtual. Let's have some fun and let's learn all about innovation within the financial services industry and Regtech together. Now, in terms of what we have planned for you this afternoon, I'm incredibly excited to be able to, or have been able to help pull together what I hope is quite an exciting agenda. Well, we'll hear from everything about the future of the Regtech Association itself and the vision for where we've come from and where we should go next. We've got live from the UK, one of the world's leading entrepreneurs in the financial services industry. We're going to have an excellent panel talking about how we can use artificial intelligence and machine learning to better fight financial crime. We have a pitch fest with 6 lucky startups who will be pitching their products and their platforms to an esteemed panel. And then lastly, we're also going to have some private members-only sessions where we're going to be talking about hurdles to innovation within the financial services industry, and one of my personal passion areas, which is rules as code. Now, I'd like to, as we get started, extend my kind of warm welcome to Kylie Rickson, the Commonwealth Bank of Australia's Chief Compliance Officer, to introduce you to the event and to kick off this afternoon's proceedings. Kylie, over to you.
Hi, everyone, and welcome to the final day of Accelerate Regtech 2021. I'd like to begin by acknowledging the traditional owners of the land on which we meet today. I would also like to pay my respects to elders past and present and extend that respect to Aboriginal and Torres Strait Islander peoples who are with us today. My name is Kylie Rickson. I'm the Chief Compliance Officer of the Commonwealth Bank of Australia, and CBA is very excited to be a sponsor of this event. CBA was the first major bank to become a member of Regtech Australia, Association of Australia, and we've been recognised as a leader in adopting Regtech as the winner of the Regulated Entity of the Year in 2019 and Regtech Innovator of the Year in March 2020. At CBA, we recognise the role that Regtech plays in enabling us to deliver to our regulatory commitments. It's critical in helping us to digitise, automate and redesign our core risk and compliance processes. Over the course of the last 3 years, CBA's emerging technology and risk management experts have established a dedicated Regtech team that Jessie is a member of to work in collaboration with our Regtech ecosystem and teams across the bank to try and accelerate our adoption of Regtech. We've undertaken a number of proof of concepts with Regtechs across the bank in different solution areas, and we're in the process of scaling some of those solutions over the next financial year, which is very, very exciting. In late 2019, CBA signed an alliance with ING London to form the world's first global Regtech alliance with the intent of helping to drive better risk, compliance and customer outcomes. The alliance centres on 3 key areas: intelligence sharing, collaboration and co-development. These initiatives demonstrate our willingness to collaborate and constructively work with members of the Regtech ecosystem to support its growth and development. We believe Regtech's critical for the financial services industry. It provides the industry with new solutions, controls and tools that can effectively ensure the stability and safety and soundness and secure operations of our industry, but also support the innovative solutions for our customers in financial services in the future. As Jessie said, we've got an amazing lineup for you this afternoon. As Jessie said, we've got Nick Ogden, who's one of the leading innovators in the financial services industry, giving our keynote address. Some great panels on financial crime and how to work with big complex banks, and a great pitch fest as well on automating and digitising risk management and compliance. So I hope you enjoy the lineup. I know I'll certainly be looking forward to some of these sessions, and I'm going to hand you back to Jessie.
Kylie, thank you for the warm introduction. Now, I have the great honour of being able to introduce for our introductory session this morning with Julian Fenwick. Now, Julian is the Managing Director and founder of Governance, Risk and Compliance Solutions, a leading Australian compliance training company. He's also the CEO of Better US Inc., an innovative adaptive learning company based in New York. Julian is also one of the founding directors of the Regtech Association, and I can't be prouder to welcome him for our first official session this afternoon. Julian, over to you.
Thanks, Jessie and Kylie, and it's great to be here with you today. Really proud to have our association with the Commonwealth Bank and the history that we've had together in establishing the Regtech Association, and great to have your involvement in today especially. I want to just take us through a little bit of history on the Regtech Association, where we came from and where we're going to now. And take you through a sort of short presentation so that I can keep myself on track. So if you'll excuse me, I will put up some slides and take us through where did we come from and where do we see the future of the Regtech Association today. The Regtech Association was established at the end of 2016, and what it came off was the back of the Singapore FinTech Festival. We'd been up there and a number of us had been in attendance. And what we found was there's a growing excitement and interest in Regtech. And it was quite surprising for us. What we felt was that it was really just a new name for our sector. Many of us have been working in compliance and technology, and those two areas have been partnered for a long time. What we did have that was different was access to new technologies, which allowed us to iterate and move solutions up into the cloud faster and cheaper. At the same time, we felt that the rate of regulatory change was accelerating. So there was a lot of different things happening in the space at the end of 2016. Back here in Australia, we found that there was a deep level of frustration, particularly with the way in which the community was communicating. Many of the conferences, we'd find that the people with the problems were all stuck in the conference sessions, and the people with the solutions were all stuck in the hallways outside. And there'd be that awkward moment when everyone raced out for a coffee break and tried to avoid the trade stands. And it really wasn't working. And what we wanted to do was try and come together and create a collaborative environment in which people could actually have conversations, could problem solve, and could do so in a way in which benefited all sides. We also knew that there was a great number of companies in Australia being founded by highly experienced, compliance professionals, people looking to solve problems where they had actual deep domain knowledge, and we weren't getting those people up on stage. And we needed to do something about that. We needed to change the dynamic. We needed to put those conversations into the conferences rather than outside in the hallways, and start with a series of showcases. And we were very, very interested in seeing how we could achieve that and whether people would actually attend. And we were incredibly surprised by the response that we had. Like with all startups, you have no idea whether it's going to be successful when you try a new idea. And this particular idea was really founded in the kitchen over beers here at GRC Solution. A group of us came together and felt, we had a shared frustration, but we felt that our entrepreneurial natures, if you could put it that way, would let us throw a bit of money at something and see if it stuck. We had great support from the likes of Deloitte and Allens, and we were able to get an event away in around about this time, 2017. And the response has been absolutely fantastic ever since. So what we wanted to do was really establish a network of best practice companies. We knew that as individual businesses by ourselves, that we couldn't solve all of the problems of compliance, particularly in financial services, but also with a more broad regulated industry market here in Australia. We needed to come together and work together and see if we could combine our skills and talents and contacts to produce an offering that was going to resonate better with organizations. We now have established a global business network. As people will know if they've been listening into the conference over the last few days, there's people coming in from all around the world. We have 170 members working together with the aim of streamlining regulatory compliance and improving conduct risk outcomes. And I think, as Kylie said, one of the important things here is that we're improving outcomes for customers. And that's certainly been one of the areas that I'm most interested in. How can we get technology to the front lines so that those people are empowered to do better by our customers? And I think that's where we're going to have lasting structural and cultural change. Initially, we started with a very small group, but we also started with a very strong philosophy. Our philosophy was always about for industry, by industry. We're always about not-for-profit. And we're always about associating ourselves with the key stakeholders in the industry, whether they be governments, industry bodies, and other international compliance associations. So there's a bit of a history here. Starting in 2017, we went from 3 to 5 to 9 members to 43 members by the end of that year. Over a very quick period of time, we established ourselves up with 146 members, looking beyond financial services and into other areas, establishing links into New Zealand, into Singapore, Hong Kong, and so on. We now have people all around the world who participate in these events. And we've come a long way. In 2020, we released a new constitution and expanded our board and reinvigorated our advisory committee, building a solid foundation while ensuring that we allow a greater number of members the opportunity to help drive and participate in the association. We survived the impact of COVID. And if any of you remember, we actually cancelled our main conference 5 days before it was due to go ahead this time last year. And I can't thank Deborah and Alison and their team for all of the hard work that they did back then, but also throughout 2020, keeping the industry association alive, keeping connected with all of our members, putting on virtual events almost as quickly as we'd decided to cancel the live event, and really, making sure that our community stuck together and that there was still activity going on. Their reach out to government in particular is to be commended. As I said, in the early days, we had great support from a number of other sponsors and other organisations keen to get involved. This year, we've expanded that to include, Microsoft, the Australian government, KPMG, FICO, the New South Wales government, and Victor Dominello's presentation the other day I thought was wonderful. And of course, the team at CommBank, who have been incredibly supportive and who are running today's session for us. I'm really pleased with the way this conference has been going, and I just wanted to highlight a couple of the comments that I'd heard as I went through. I've been a big fan of Swapnendu Mohanty from the MAS in Singapore, and I was really pleased to see him involved in this event this year. What he spoke about was quite empowering, I felt. He said that the RegTech Association is really making a noise globally. And whilst we are at its roots an Australian association, we never wanted to put Australia into the title of our organisation because we wanted to have that reach. We wanted to be able to connect with people around the world. He also said that we need to move forward faster as an industry, and that we needed to connect with each other, and that we needed to look at building utility services and avoid the duplication of effort across the sector. And I think a lot of our organisations in Australia can learn a lot from what's going on in the Singapore market. I'd also like to call out Pauline Ray from Expand Research. The RTA has worked with Expand for 4 years now, and their research has been absolutely invaluable in understanding where the sector is at and really giving us some grunt in our thinking at board level. Pauline spoke about the need for a uniform taxonomy and drew our attention to the funding difficulties. Her research, and I've got a couple of her slides here, has covered the RegTech industry in Australia, where she's identified at least 80 RegTechs in her research, and also more globally, working with over 600. They've built out a taxonomy which we can all work with and understand where the players are and where the connectivities are in the value chain. And for me, that has been one of the most valuable pieces that we've had to work with, because it really gives us something that we can explain to the wider community, be it government, be it regulators or the regulated industries, as to where each of our members sits in this taxonomy. Pauline has identified that Australia is running third as far as the innovation side of the RegTech industry. We certainly have a lot of RegTechs who are born here, raised here, and growing here, and starting to export from Australia. But she also highlighted how poorly we were doing at getting investment on board, and how the other countries seem to have better and more sophisticated approaches to investing in RegTechs. And that's probably just as much an issue to do with the size of our market here as it is to do with our ability to export. I think Australia is incredibly well positioned, and we should be very proud of where we're at. But I also think that there's great opportunity to be had as we grow our industry and take it to the wider world. And look, it's not all bad news. Whilst we're only getting a very small part of the investment funds that are going on, there are bright sparks that are happening. Only this week, our friends at Encompass, who have been a member for some time, announced a new investment from Beacon Equity Partners. In November, Identity, one of the very early members of the association, raised over $4 million in December, I think it was December 2020, via an oversubscribed placement to sophisticated institutional investors. Kicker, another ASX-listed RegTech, rose 20% the other day, just after it announced a partnership with BAE. Globally, investment in RegTech is going gangbusters. Jumio this week announced a $150 million equity raise, successfully placed with Great Hill Partners. So there's a hell of a lot going on in the space. I would like to call out that Australia has a lot of strength in its superannuation, and there are examples, superannuation funds. There's a lot of funds there that could be invested into RegTech. And we see models like Ontario Teachers out of Canada, who are active investors in the RegTech space with companies like Mitratech and RSA. Looking to the future, there's obviously great support from government. Victorian government this week announced their $2 billion breakthrough fund. and that's been on top of some other funds that they were working on. New South Wales government has been a fantastic supporter of our industry and our association, and Victor Dominello yesterday announced a lot of the new methods and new ideas that they're putting into enhancing the tech sector in New South Wales. He also gave a great pitch for those who want to move here. I know we're going to hear a little bit about rules as code, but I think that is one of the most important investments Australia can make. And I think we'll cover that in more detail today, but it's really great to see that the New South Wales government and the federal government are both heavily involved. And we know about the great work that Professor Governor Torre and Dr. Alice Witt have been doing in that area. I think our RegTechs will be very supportive of that. For me, what I'm most excited about is how do we showcase these wonderful RegTech players. We've got a fantastic pitch fest this afternoon, and I just thought I'd list some of those wonderful RegTechs who are putting themselves out there today. We see that the RegTech Association can have an ongoing impact. What we want is to be a driver of trust in the economy. We want to ensure that the people buying our RegTech are getting huge benefits out of it, and that should flow on to consumers. For me, that is where we really, the rubber hits the road. If we can influence culture, if we can automate compliance, if we can actually bring all of those things to the front line, we will be doing better by the end consumer. It's not necessarily about reducing the red tape. It's about being smart with regulation and how we can work with it. As an association, we're working on a number of strategic imperatives. For those that are involved in the board and the associated committees, it's really important that we know where our direction is and what we should be working on. We still have very limited resources. Deb and the team are really running things on a bit of a shoestring. And so for us, we're trying to streamline what we're looking at and focus on what's important. For us, that's been navigating the COVID issue, advocating the value of RegTech within government and regulators and to the broader market as well, helping our RegTechs explore those global markets, seeing where we can get beyond our own shores, and looking at how we can facilitate investment opportunities back into Australia. So thank you for that. It's great to be with you here today. I'm very proud of what we've achieved, and I'm sure you are too. I'm hoping that the rest of the day will be a fantastic insight into what the future could be for Australia. Thank you very much.
Well, Julian, thank you for the Kickstarter for this afternoon's session. I just always get so inspired hearing about the humble beginnings of the association and where we are today. And I think just the opportunity ahead of us all. I think here at the Commonwealth Bank of Australia, we're really passionate supporters of the technology industry here in Australia. And I think kind of particularly as we start to come out of COVID and we continue to recover and transition the economy, I think it's a great opportunity for us to, similar in the way that we have with Quantum, start to think about the RegTech industry itself being an industry for the future in Australia, and having Sydney be positioned as that technology hub, as Minister Victor Dominello spoke about earlier in the week. I think it's a great opportunity for us. Now, I am incredibly excited to be able to announce our keynote presenter for this afternoon, which is one of the world's leading entrepreneurs in the financial services industry, Mr. Nick Ogden. Now, I think for those of you who haven't met or heard of Nick before, he is a serial entrepreneur, and he is actually the founder of e-commerce and helped set up one of the world's first online shops way back in 1994, and since has kept himself busy founding kind of 4 key payments businesses in the UK. The first is WorldPay, which was one of the world's largest payments processing businesses. The second was Cashflows, which was really, one of the first digital banks in the world. I think ClearBank, his next venture, is the first clearing bank in the UK in 250 years, which is no mean feat. And lastly, RTGS is a global interbank liquidity network that operates with central and commercial banks all over the world. So Nick, it's a pleasure to have you with us, and particularly considering that you are up at 3 a.m. to be here live. So welcome, and I'll throw it over to you before coming back to some Q&A shortly.
Okay, thank you. Yep. Good afternoon, everybody. It seems quite strange saying good afternoon at 3:30 in the morning. And that also following on from somebody talking about beer, there's something quite not right about that. But anyway, I just want to give you just something to think about before I start talking. And that is this thought. Innovation has always followed a financial crisis, and regulation always follows innovation. And as we're in the process of going through and hopefully exiting a global pandemic, which is a massive crisis, it's going to be quite interesting, I think, to see how much innovation gets left shifted or advanced in relation to the changes that we're all experiencing, which are being demonstrated today by the fact we're doing a virtual conference with, I think, 1,000 odd people due to attend from 40 odd countries. Anyway, let me start. And, where did Regtech come from? Well, I might have a clue to that. And it's this. It's a piece of cable. And back in 1994, we had a computer, a 486 computer called Zippy, which we'd connected to the internet using a 64 kilobit baseline. And sitting next to that computer, we had an X25 box, which was connected to Barclays Bank, because we processed Barclays point of sale transactions in the Channel Islands. And I sort of was chatting one day to Keith, who was one of our techies, and I said, wouldn't it be interesting if we could actually take a credit card transaction from the computer, the Zippy, and put it into the X25 switch? Because ironically, all the credit cards, most of them still today, are embossed with a card number, so that it's very, very easy for somebody to get hold of a card, key the numbers in. And so we could do that using a Mosaic browser. And so that we surmised that we could basically take that, use the keyboard to key the numbers in, and transmit them to the X25 switch. The problem that we had was this, and it was actually getting the connection between the 486 computer and the X25 switch, but we managed that. And what effectively that allowed us to do was to process in a real time a credit card transaction from a shop called the Wine Warehouse across to Barclays Bank in the UK, I should add, without them knowing what was going on, and process the sale of a bottle of wine, bottle of Chardonnay. It must have been Australian Chardonnay, by the way, but anyway. And that was sort of how e-commerce, from where we were sitting, started. The ability to effectively take a physical card transaction, process it through a system, and satisfy a transaction within an online shop. And that quite quickly got us to developing a joint venture with Barclays that we launched in the summer of 1995, which was called Barclays Square, which was the world's first virtual shopping mall. As a commercial exercise, it was completely useless because we'd only got about, I think, 60,000 people connected to the commercial internet at the time. And the items that we were selling in the shops, we had Toys R Us, Argos, Sainsbury's, major UK retailers online. The market didn't mesh up. The products that we had to sell didn't meet the products that people wanted to buy. But something happened, which is quite important. What happened was we started getting emails in from people saying, can you tell us how much these things cost that you're trying to sell? So we had just assumed that the website was broken because, tech was flaky in the mid-90s. But what they were really saying was that when we go online to make a purchase, and this was, potentially somebody coming from France when they still had the French franc pre-euro, and saying, look, we can see that you've got these things for sale, but they're all in pounds. We don't know what a pound is. Oanda hadn't been invented, so we hadn't got access to FX rates. So how are we ever going to make a value for judgment decision as to whether we should buy anything online if we don't know its value in our currency? And that was sort of a bit of a eureka moment in relation to realizing that e-commerce and digital technologies were creating a stateless environment. And what I mean by that is that, today I'm sitting in Switzerland talking to you guys down in Australia. We can be anywhere doing anything, but nobody really knows where you are. And what we really realized very, very quickly was that the internet was creating a global market, but there wasn't a global currency. Bitcoin hadn't been thought of, for example. And so what we did was we developed a processing system with NatWest Bank called WorldPay. And what that allowed us to do was to prevent goods and services in a way that consumers could understand the value and make a purchase. And the system worked, and our first customer, if that's the right way of describing it, was the Diana Memorial Fund in September of 1997, where we had people from all over the world making online transactions, donating to the Diana Memorial Fund. And very, very interesting, as part of that process, we had no chargebacks, and we had no refunds, and we had no fraud, because equally at that time in the market, it hadn't been invented. We didn't have to work with regulators because regulators didn't know what we were doing. And we ended up talking to the bank, to NatWest Bank, about what we were doing, and explained to them that we had to take on the risk processes to actually manage e-commerce merchant acquisition. In order to do that, we went and bought £100 million worth of credit insurance from Lloyd's of London. And again, we used that then to pledge, for want of a better description, to NatWest Bank and National Data Corp over in Atlanta in America, to use it almost as a virtual balance sheet, if you like, to collateralize the perceived risk of doing card transactions. Notwithstanding the fact that we still hadn't had any chargebacks or any fraud, but there was this perceived risk within the point of sale marketplace that was going to come, and of course it did. So we moved on. WorldPay grew into a very, very significant business. It's, I think, worth about £34 billion or dollars today. Unfortunately, we exited too early, but that's the way of the world. But it was a very, very interesting experience. But what effectively it started to show was that effectively technology had to have some structure. And in 2000, we started talking about how we had to, if you like, regulate or create a secure environment around e-commerce. And that led us to be very, very heavily involved in the creation of the PCI standards, which, you know, it's a bit like Marmite or Vegemite today. You either love it or hate it. But it was very, very important at that stage in relation to creating some standards in relation to security and compliance, and probably starting the move forward. In early 2000s, the regulators hadn't got up to speed with what we were doing. You know, the PRA and the FCA hadn't really embraced what e-commerce really meant, and that was yet to come. During 2005, 2006, we started to look at how voice biometrics could be used to authenticate transactions. And the reason why we wanted to do that was that most people were starting to use these sort of things, smartphones and all the rest of it. And voice is more natural than typing in relation to communication. And we felt that we could use voice biometrics to authenticate a transaction securely, so that, you know, I signing my name by saying Nick Ogden effectively could secure a transaction. We developed that technology, and then we got to the point of saying, how do we prove that actually the technology is supportable and verifiable? What we did was we adopted some of the legislation that was being developed in the European Union at the time in relation to digital signature legislation. And so what we did was we applied digital signature legislation to voice biometric technology to provide a certification and validation that a transaction had been processed. Pretty much in the same way, where if you go into a physical shop today and you process a card payment, you may enter your PIN to validate it, but you get an auth response back, tying those parts of those components together. So moving on from that and coming on to the point of that I made at the beginning, that innovation follows a crisis, the European Union had been looking at basically putting some regulation together called the Payment Services Directive, which many of you will be aware of, which came into force in 2009. And the intention behind the Payment Service Directive was that what we were going to do is change the market, encourage competition, build this new digital economy, encourage more fintechs to get involved in providing alternative and competitive financial services. But it didn't really work very well. And the reason why it didn't work was we're just going through and we're trying to start to exit the global financial crisis. And so the banks, who were the purveyors of the connections to the infrastructure, this card scheme rails, the payments rails, and all the rest of it, were going through the rebuilding of their own balance sheets following the global financial crisis. So their ability to support this change in structure that the Payment Services Directive created was to a large degree limited. So things ran much more slowly than anybody imagined. But what we managed to do was to pull together, with the support of the PRA and the FCA, a structure whereby we created this product called Cash Flows. And what Cash Flows was effectively a merchant acquirer with an issuing platform linked into HSBC Bank for agency banking and tied back into Shawbrook Bank for deposit taking. It was a unique project. We had incredible support from the regulators in relation to putting this together. And the key that we had to find to make the whole project work was actually identifying the location of a sort code to actually allow the transactions that we're doing to move through the interbank systems. We eventually sorted that out. And I remember having a meeting with Swift about connecting this thing to Swift. And they said, well, you've got to come up with a Swift BIC, and they're quite complicated because there's not many left and all the rest of it. And so we went off, and perhaps we went and had a Tina Foster's or something. We did the talk about it in the kitchen conversation, and we decided that the BIC that we wanted to try and get for Cash Flows should be cash. And surprisingly enough, cash was still available within the Swift network. None of the 40-odd thousand banks and members of Swift had actually come up with that one. And so when you're looking at things to develop and ways to brand and build your business, sometimes there are still many, many opportunities sitting in front of you. So Cash Flows is still in existence today. And effectively what we did shortly after that was went and had a cup of coffee. And the cup of coffee took place early in 2014. And the coffee was with a lady called Mary Starks, who was the interim payment service regulator in the UK. And she was at a conference with some people from HM Treasury. And we were just having a cup of coffee, chatting in the corner before Mary was going to go and talk. And I said to her, what are you going to talk about today? And she said, well, I'm going to talk about the financial services access to the payment rails in the UK. And having just gone through building an agency bank, gone through connecting to the UK faster payment system, I knew that this was not easy. So effectively, I challenged Mary and I said, well, why don't we have a new clearing bank in the UK? Why can't we effectively take advantage of the opportunities that are coming into the marketplace and come up and create a new technology bank, new clearing, new architecture, new systems, and new processes? And I said, I can't understand why it's not happened before. And perhaps there's a regulatory or political reason why that didn't happen. Anyway, a few weeks later, Mary got in touch with me, and many of you will have realized, and perhaps it's the same with these virtual conferences, that you go to a conference, you meet thousands of very interesting people, and many of them evaporate immediately at the end of the conference. So effectively what we did was we then started to set up a new clearing bank. And I remember one spectacularly interesting meeting that we're having in Threadneedle Street at the Bank of England. And we were talking about how this new bank was going to work and all the rest of it. And one of the people in the meeting looked at me and said, Mr. Ogden, I said, yes. He said, could you tell me where this new bank is going to be based? And I looked at him, I said, yeah, we're going to build it in the cloud. And everybody in that meeting looked out of the window because they didn't realize that we were talking about cloud computing. They understood from a regulatory perspective what a prudentially regulated bank was, but they didn't understand and hadn't got to the point of grasping that you could take what was traditionally regarded as a bricks and mortar bank and pop it up into the internet cloud. So we went on from that. It ended up, despite that little bit of laughter that came from explaining what cloud computing was to them, launched the ClearBank, got ClearBank operational, and today that's a growing business with customers throughout the UK. I think the final part of the jigsaw that sort of again all of my life I've involved conversations and challenges to regulators, and I know that I'm regarded by some of the people at the Bank of England. My nickname is the Pest because I do challenge them on things from time to time. But when we were building ClearBank, we came up with the challenge of, how do you actually know where the money is? And CBA will have calls every day from their customers saying, where is the money? It's the most frequently asked question in global financial services. And so what we did was we looked at how the system worked. We realized that the absolute core of where the money is in central bank liquidity within reserve accounts. And so over the course of the last couple of years, we've been working with a number of regulators around the world. I've visited all the regulators in Australia and in New Zealand to explore building a new network to effectively speed up the ability to transact. And this isn't just doing international payments or whatever, it's how we transact and move money around the world and effectively swap liquidity between commercial banks with the oversight of their regulators. And one of the things that was quite interesting about all of that was that we found out in a meeting in Washington, DC with the World Bank and the IMF, that we'd come up with a number for what we call financial friction. And financial friction is the cost to the global economy of all the inefficiencies that we suffer every day. Late payments, delayed payments, where's the money, all of the stuff that all of us have had experience of. We calculated that financial friction was about $2.7 trillion a year, which is a lot of money. We sat in this meeting in Washington, DC, and were talking about this. And one of the guys from the IMF said, actually, Nick, I think that's the wrong number. And I said to him, do you know how hard it is to do $1 trillion calculations on a smartphone? And he laughed. He said, no, actually, he said, I think your number is low, and we'll come back to you and tell you, what the real number is. And they came back and said that the real cost of financial friction is $15 trillion a year. And if there's a goal for RegTech in relation to how you can transform and how we can move the market forward, it's remembering that number and then working to try and reduce that financial friction, because that has a direct impact on the individual cash flow of businesses and consumers everywhere in the world. And coming out as we are of a global pandemic, it's perhaps something that we all should consider and take as our mantra to try and reduce financial friction, and achieve that by building great technology, working with great regulators, and transforming the way that we operate as consumers, individuals and businesses. And with that, I'll go now back to Jesse for some Q&A, which I hope are easy, given the time of the morning it is here.
No, I'll go easy on you, Nick, and thank you for that. It was quite fascinating, kind of hearing the journey over kind of decades, as it were, and the progress that you're making. And I think that factoids around financial friction in particular is something that's, I think, a noble challenge that the industry should stare into. Now I know we've only got a couple of minutes for Q&A, but I think the first question I had for you was around, I really liked, your framing around how, as a result of a crisis, innovation and change comes along with it, and then regulation on the back of that. I'm really keen to hear your thoughts and reflections on, particularly as economies start to emerge from kind of the COVID-19 crisis, what are the kinds of innovation trends that you're starting to see and grapple with, and also what you think the long-term effects of this crisis will have on the industry more broadly?
I think there's one obvious change, and that's cash reduction is happening all over the world. And it's one of those things that, I remember one of the guys at the Payments Council in the UK was threatened by an old lady with an umbrella in a post office for suggesting that cash would end and she wouldn't be able to go to the post office and get her pension. But the consequence of the COVID pandemic is that we've all gone contactless, and the contactless rates in the UK have just pretty much doubled to encourage increased contactless use. So I think that contactless payments and the way that we transact using cash has changed and isn't going to let you go back very, very quickly. Why do you want to go to an ATM now? You don't necessarily need to. The black economy potentially will support, and the gig economy may well require support of cash, but it may well be a blessing in disguise in relation to move of all things digital. I think that some of the other big drivers that are coming out of this pandemic, and this conference is an example of one, is that we've all had a digital wake up and a digital training course, which would have cost billions had we had to pay for it. Everybody now communicates in a different way. We talk and have conferences and meetings all over the world. If this had been 2 years ago, or 18 months ago, I would have been leaping on a plane and flying down to Australia to talk to you guys and whatever. Now we miss all of that. We still have the jet lag from the 3 o'clock in the morning start, but we don't have the travel fun associated with it. So I think the way that we work is going to change and transform rapidly. And that's going to, again, where I see it, is add to more innovation more quickly.
I think so. And I'm very happy so far. We're 45 minutes into this afternoon session. We haven't had a presenter jump on while they've been on mute. So I think that might be a world first for an industry conference like this. I think my next question for you, I really loved hearing you talk about the collaboration between kind of RTGS Global and the regulators, almost solution by solution, and kind of that close guidance and steering and ensuring alignment with their frameworks. I'd be really keen to get your reflections and thoughts on how we can have that as a standard way of operating within the industry, or even how we can do more of that, because I think it's such a powerful connection point that's driven, in your case, real progress.
Yeah, I think that it's the way you go about things. One of the things that I realized early on, I guess it was from the learnings of building a bank, is that you need to engage with the regulators, and they're actually there. I've not found yet a difficult regulator. I've found some that ask difficult questions, but that's different from them being difficult. And I think part of what we've done within RTGS is to bring together commercial banks on one hand, regulators on the other hand, and almost create this neutral core to try and find pathways between the two that work. Where we remove Herstat risk, we reduce concentration risk, we reduce settlement risk, and we take away credit risk. Now, that has benefits for commercial banks and regulators alike. But in trying to do that, we brought together an advisory group. We have Jean-Michel Godefroy, who's the former Director General of the European Central Bank, as one of our advisors. And what you need to do is you need to basically bring together a group of like-minded people to help you. And then I think just openly communicate the vision and what you're trying to achieve to the market. There's no guarantee of success. I've just been incredibly lucky in relation to the teams of people that I've managed to attract to the various businesses that I've been fortunate to found. I think it's bringing together the right people, having the right conversations, and accepting that, you can change things if you want to. The doors are always open. But if it's something that doesn't make sense, be prepared to have to tune your plans and and listen to what you're told. And you'll get there, I think, in the end.
No, it's perfect. And speaking of amazing people having the right discussions, I saw quite an exciting announcement about RTGS and a couple of members of your new advisory board. Would you be able to provide a bit more insight into your exciting press release?
Yeah, sure. We've been building this advisory group for the last year, and when we're in discussions with 45 regulators around the world, and that is an interesting position to be in. And in order to have, if you like, a central focus of how that works, we pulled together this advisory group. So we've got Phil Kenworthy, who used to be the CEO of ChapsCo in the UK, the high value payment system. Dr. Ruth Vanderhoever, who's I think one of the only people in the world with a PhD in payment systems. Lord Chris Holmes, who sits in the House of Lords in the UK. And as I was just mentioning, Jean-Michel Godefroy, to help us basically manage this. What it allows us to do is try and take a balanced view in relation to the discussions we're having with the regulators and the discussions that we're having with the commercial banks. And that's quite important when you build an infrastructure that can move $1 trillion from New York to Sydney, Australia, in 50 milliseconds, achieving settlement finality.
No, that's unreal. Well, Nick, thank you so much for your time and for waking up so early to join us. It's been an absolute delight. And, when you're able to travel, we'd love to host you down here in Sydney when we can have an in-person conference sometime again in the future.
Excellent. Listen, thank you very much, and everybody enjoy the conference today and just keep innovating.
It's fantastic. Well, thank you, Nick. Excellent. Well, up next, we have a panel where we're going to be discussing how we're going to disrupt financial crime using artificial intelligence and machine learning. And the panel this afternoon will be facilitated by Lisa Dobbin, who leads Deloitte's financial crime practice. So I'm incredibly excited to hand it over to Lisa, who's going to walk through and give an introduction of our lucky panelist for this afternoon's exciting discussion, and then lead the charge. So Lisa, over to you.
Thanks, Jesse. And look, likewise, thrilled to be a part of this session, and particularly the innovation stream. And I think that's really apt when we think about financial crime. I guess it's an interesting time for financial crime in Australia in particular. Obviously, we've seen, the enforcement wave driving huge amounts of intelligence data. And that just really underscores the importance of innovations in technology about how we deal with that data. So I'm thrilled to introduce the panelists today. I've got John Fogarty with me, who is the EGM of Financial Crime at the Commonwealth Bank. There's John. We actually are in the same room. I know that looks a bit strange, but on separate laptops to keep it working for the system. I've also got Sean Matheson. Sean's the head of Asia Pacific for Quantexa. And Timothy Choon, who's the MD of FICO in Asia Pacific. So welcome, everyone, and thanks for making time. So we are here today to talk about how we can better disrupt financial crime using advanced analytics and machine learning. So, John, I might start with you. CBA's seen plenty of change in financial crime over the last 3 years. Are there any insights you can share on the bank's journey and how technology is playing a role in that?
Yeah, thanks, Lisa. Look, my reflections on this, I guess, are a little bit, I wouldn't say different, but I think it probably from a perspective of a large bank and a large organisation with lots of interconnected systems, a spider web of organic growth over 100 plus years, and then to come in over the past 3 years and look at the financial crime elements of that sparks a different conversation around technology. And I think technology has got a place to play. There's no doubt about that. And whether it's artificial intelligence, machine learning, the trap you can fall into, I guess, from a reflection point of view is to say you don't jump to the solution without understanding the problem first. And I think the problem for any large institution is really around its data, and you can't have good artificial intelligence or any sort of machine learning without the proper data that underpins it. And when I talk about data, I'm talking about the quality of that data and whether A, it's accurate, and B, whether it's going through from a source system through to your artificial intelligence or machine learning system in a timely, accurate and complete manner, and it's not being extracted via the various layers by which it gets there. So is there a place for it over the past 3 years? Definitely. Are we there yet? Probably not. We're looking to use it, and I would suggest there's two ways that it can be used, and probably reflective of the other people on the panel, is that I'm looking at it more from a two-path. One is forward-looking. So how do we use artificial intelligence or machine learning? How do we use that to be forward-thinking from an intelligence point of view? And then secondly, where I guess internationally have been and parts of different organisations in Australia, really using that sort of technology to help with the disposition of some of our core elements around alert generation and disposition of those alerts, and how you can come up with those elements are really interesting, particularly when we want to start engaging with our regulators, and particularly when you're looking at a regulatory obligation, understanding that obligation right through to its end, and how is that alert dispositioned? Do you have a defendable model that you can stand up to any regulator? And I think taking some of the regulators with us on that journey is also something that I've reflected on over the past 3 years.
Thanks, John. And I want to pick up on some of those points you made later in the session, but maybe just going to you, Sean, and just picking up on John's point around the importance of data. So how critical is, this? And look, we all know that many financial institutions have huge amounts of data. It's in all sorts of different places. How important is it to have the data in order to get started on a journey with advanced analytics or machine learning?
So look, I think that's a really good question, Lisa, and I think actually from my perspective, it's critically important to look at the data before you look at the techniques that you want to deploy from an analytics point of view. And actually, I think one of the overriding themes that I'm seeing in the market at the moment, which I think is the most exciting, is actually specifically around that area of data manipulation and data preparation with analytics in mind. So actually, a lot of the techniques that we see in, from an advanced analytics perspective and in terms of machine learning have been around for a very, very long time. So if you're thinking about, supervised machine learning techniques such as neural networks, decision trees, these things have been around since the 70s. They've evolved in that time, but they are long-standing techniques. And similarly with unsupervised techniques that look for kind of outliers and abnormalities in data. Again, these are things that have been around for a really long time. I think where we're really seeing a paradigm shift in the market is the ability to prepare and process data in such a way that it optimizes the output of these sorts of analytics. And so that's actually a lot of the work that I've done over my career over the last sort of 12, 15 years has been focused, yes, on the analytics, but actually on getting the data right first. Now, to your question around, to what extent can an organization dive in before all their data is perfect? I think it's about striking a balance. Because if an organization wants to take advantage of advanced analytics, AI, machine learning, and they want their data to be perfect first, they'll probably never get there, right? It'll be a never-ending cycle. So it's about looking for the quick wins, understanding the data in your organization that you trust and how you can leverage that data to take advantage of these techniques. So I think it's about striking a balance between, not trying to expect every piece of data in the organization to be perfect, but also not diving into an analytics project without putting a lens on that first.
Thanks, Sean. That's helpful context. Timothy, I might go to you next. So, to Sean's point around, thinking more strategically around where you dive in to, experimentation with technology in this space, what sort of use cases around financial crime are you seeing gain most traction with Australian organisations? And globally, actually, we'd love a global position as well.
Yeah, sure. Yeah, I'm currently based in Singapore, so I have a global background, more of a global perspective, especially in Asia Pacific. I think I echo Sean's point that you cannot possibly have perfect data. You cannot have the perfect circumstances before you start. At some point, you start and you experiment and you fine tune your data. Of course, given that artificial intelligence has been around for a very long time, as Sean says, since the 70s, and we have seen, companies coming up with consortium type of data where you can actually leverage on the learnings of other, entities or financial institutions that have gone through the pain. You can leverage on the models that have been refined. Maybe it's not perfect for your particular use case in your financial institution, but there's a lot of learnings that you can actually derive from the consortium that have gone before you and have shared data among them. Of course, non-PII data and statistical data that actually can fine-tune. So you don't start from scratch. You're not starting from zero. You start from somewhere, maybe halfway down the road, and then you start to fine-tune your approach as you go along. In terms of the use case, I think what we're seeing is the trend towards more complicated financial crime kind of being committed with, I think the previous speaker was speaking about contactless. Everything is moving contactless. It's moving onto the internet now. So you can you can imagine that there will be an explosion of data over the internet. Everything is going digital. So how do we be able to make sense of all this data that's going on? How to derive intelligence from this? And the crimes that's coming on is starting to become more complicated. We see crime use cases of trade-based money laundering where it cuts across various sectors. We see cryptocurrency type of money laundering activities that's going on. So the use cases are becoming more and more complex, and using standard tools, I think they've run their course. I mean, you can squeeze them only so much. It's time to look at some new technologies. Of course, it's not going to be a bed of roses and it won't be everything smooth, but you're going to get there gradually, and together with the other like-minded financial institutions, I think it's a good experience, learning experience as you embark on the journey.
Thanks, Timothy. And John, I wanted to come back to something you said before around, and I think it goes to what Timothy was just talking about, around taking our regulators on the journey with this and having, a defendable model. How do you think about doing that? What's been your learnings in how to engage with the regulator and bring them on that journey?
Yeah, thanks. Look, let me answer that two ways, I guess. I completely agree with Timothy there. The old style, I guess, of transaction monitoring type systems that we have relied on as an industry for so long are not reflective of current day typologies. And they still have a place to play in that regard when you look at it from a banking perspective, transaction account reviews and payments coming through. But when you look at some of the typologies that Timothy mentioned there around cryptocurrency, trade-based money laundering, and TBML is still very paper-based. And so there's different elements of those, different parts of the spectrum, really. You got one really digitally focused, another one still using paper-based. And so from a bank perspective, how do you get across all those issues with one system? You can't. So back at the game, what Sean was talking about, how do you get a scenario-specific or user case per type of scenario? I mean, that's something that we would consider. Secondly, then, to answer your question, how do you get the regulators across it? AUSTRAC is completely open, and we've found them open. We have a very open and transparent relationship with AUSTRAC, and they would be more than acceptable of us coming in and having a conversation with them about that. I'm sure maybe some other vendors have had conversations with them. It's a case of how do we show that we are meeting our obligations across all the designated activities that we are undertaking, and how are we demonstrating a risk-based approach to reviewing those elements coming through our organisation. If we can come in and show what's, I'll use a crass term, in the black box, and showing the output of that and how we're managing that risk, and bring them along and say, what else would you like to see within that process, then that's the way I sort of see the future of this coming. And it's got to be a collaboration. We all have the same purpose here, and that is to prevent and detect and disrupt financial crime. And I think we can do it, and we can do it collectively together, then it's be far easier for everyone.
Thanks, John. And so what I heard, maybe just to paraphrase what you said, certainly historically, we've seen organisations have very much kind of a single, almost one size fits all kind of legacy platform. Are you seeing this as being more about like an ecosystem of both technology and approaches as being the most effective way of doing this?
I would like to see that in the future. I think that's got to be the way forward. I haven't yet to see one solution that can cover off everything. And as I said at the beginning, you move between a more detective type system for transactions and based on typical money laundering typologies over a period of historic time into something else which could be looking at forward-looking based on past scenarios but are happening within your organisation unbeknownst to you that the old traditional type of transaction monitoring may not have picked up. So it's a combination of both. There has to be some sort of ecosystem operating within an organisation, at least the size of CBA, to pick up on all those types of of issues that are running through the organisation.
Yeah, I completely agree. And I think, Sean, maybe to jump to you, banks like CBA and others in the industry, will have already invested, significantly in their technology suite for financial crime. How do you see RegTech, advanced analytics, these sort of techniques complementing those investments rather than, if you like, replacing them?
Yeah, thanks, Lisa. So I guess the main thing goes back to what John said at the beginning, which was, don't start with the technology or the technique, start with the business problem. So what we spend a lot of time doing in Quantexa is working with our customer base, which is predominantly large banks all over the world, to really understand what are the gaps, what are the gaps in their armor, what are the things that they can uplift, rather than trying to kind of headbutt our way in and say, tear out all of your old financial crime kit and put Quantexa or any other new product in. What we're doing is using our technology to provide meaningful uplift in the context of the landscape that's already there. Because as you said, banks have invested significantly in their financial crime suites already, and that said, as we've already acknowledged, those technologies are getting squeezed in certain areas. So I think it's really about focusing on what are the genuine business problems that the industry is suffering from, and where can we embed technologies and techniques into the existing landscape to uplift that capability.
Thanks, Sean. And maybe just going back to the question I asked Timothy earlier. So with that in mind, we're thinking about the genuine business problems. Can you give us a sense of some of those? So we heard Timothy talk about trade-based money laundering, which we know is a very complex, difficult to detect typology. Can you give us a flavour of what sort of business problems you're seeing banks grapple with and that Quantexa has been working through?
Sure. So within the financial crime space, I guess the use cases that we're seeing a lot across the industry kind of broadly fall into 3 or maybe 4 areas. So the first is detection, and that's very much in line with what Tim was talking about before, and I'd certainly echo those points. So and where we're seeing, I guess, adoption of advanced analytics techniques is in those more complex detection use cases. So trade-based money laundering was mentioned, cryptocurrencies were mentioned. Other ones include financial markets, correspondent banking, child exploitation, some of these sorts of areas. But then in terms of the other 2 categories, or sort of 2.5 categories, where we're seeing a lot of the adoption, the next is, I guess, in optimizing what's already there. So where you can go in and you can put in a new system to detect complex things like trade-based money laundering. There's already a system in every bank which is addressing a lot of the traditional AML risks in retail and business banking, but there are inefficiencies with traditional techniques and traditional systems. So we're seeing a large adoption of these sorts of new technologies to almost put a wrapper around those existing tools to uplift capability, and that can be in terms of driving efficiency, making more sense of the alerts that come out of those systems, building sort of processes in place to automate the data collection that investigators typically have to do when they do investigations. And then I guess that takes me on to the third category, which is really around that investigation space. And this is about using advanced analytics to make sure that a financial crime investigator has all of the information they need at their fingertips to be able to enable them to not just disposition alerts and make decisions faster, but to actually improve the quality of the decisions that are being made. So it's really across those 3 categories: detection, optimization, and investigation. I think the focus for us is really very much on improving the quality of detection. So that's always the number one objective. And often there's an efficiency gain, which is a side product of that. But really what we're trying to do is make sure that if there are risky behaviors going on, the clients in the industry have the best possible chance of bringing those to the surface. And that's what we do a lot of work on in Quantexa, but it's not specific to Quantexa. There's lots of technology companies out there that are in that same field, looking at the existing landscape and finding opportunities for uplift across those main categories. The last one that I would draw upon, which I'm seeing less movement on in Australia actually, but globally, we're getting involved with this quite a lot, is in the KYC space. So I think pretty much every bank under the sun now has a lens on what we would call kind of perpetual or trigger-based KYC. So beginning to take a few steps away from that traditional kind of 135 refresh cycle model and going to a more live picture of customer risk. And we're starting to see adoption of those sorts of techniques and banks really beginning to achieve that vision kind of in Europe and a couple in the US as well. Haven't seen quite as much activity in Australia in that space, but that's definitely something that we're starting to see people talking about.
Thanks, Sean. I want to just go back to this ecosystem kind of point and maybe get each of your perspectives on it, maybe starting with you, Timothy. If we think about, what we're talking about before, or that John was talking about, was really an ecosystem within an organisation of different approaches, different technologies, different business problems, if you like. Is there a role for technology to play in a kind of a broader ecosystem? So, across institutions, with government, for example, utilities. And look, I think it's fair to say we're at early stages of that in Australia. How do you see the role of RegTech playing in those kind of broader ecosystems?
Yeah, that's a pretty macro kind of a perspective question. As always, I think you have to, I would think of it as a chain. So who's the final consumer of AML process? If you think about it, the real consumer is in Australia's case, Austrac. They're the one consuming the SMRs and the TTR reports from all the financial institutions. That's an output from the processes, the operations, and the technologies from the banks itself. And then this is derived from the transaction or the activities of the clients. So it goes out ultimately to if you think about it, Austrac is the real consumer of all the outputs from all the financial institutions, processes, operations, and systems. But even for them, I think they are, as we see now in regulators, and I've spoken to regulators in other jurisdictions, they're usually they face the same phenomenon of being swamped. They get a lot of noise, they get a lot of SMRs, TTRs that they struggle to make sense of. And I've talked to one regulator where they've actually started to liaise with customs, port authorities, to get better at the different agencies to get a better sense of what's going on in the macro perspective. I think they're trying to crack down on predicate crimes, child exploitation, even illicit wildlife trade, trafficking, that kind of stuff. So they're trying to put their finger on what's going on, the pulse of what's going on. So for them, the technology that would make sense is actually being able to link the players, the actors, the customers across financial institutions. So it could be some information coming from CBA and coming from other institutions. It's up to the regulator to be able to link them together in a meaningful way. And then from this spider web, look for maybe the big boss that is driving the illegal activities behind this whole web. And so from a macro perspective, I would say that's where the technology play a part, because it's kind of making sense of all the data that's coming from the mass of data that's coming on from the different financial institutions and from the different players in the whole ecosystem. But from the financial institution perspective, maybe taking a more micro perspective, I think Sean is right. I think it starts from where the business objective is. Are you inundated with false positives? Is that your main purpose, to try and find the needle in a haystack, and the haystack is getting bigger and bigger? Or are you more focused on finding typologies, trade-based money laundering, crypto, illicit wildlife trade that's very pervasive in Southeast Asia? Are you looking for new typologies that maybe your existing incumbent system is not able to pick up on? If that's looking at it from different business objectives, you would actually dictate where your kind of technique would be going forward and your business perspective. But I think that at the end of the day, I think the key word that I would say when we actually look at advanced analytics or technologies, the key word is operationalize. Don't throw out what you have that is working. Don't, as they say, don't throw out the bathwater with the baby. Try to operationalize it. Try to find a way to bring together the new technologies with the old, because there is still value, there's still intelligence in the existing system. Operationalize it and make sense of it from a process and operations point of view. If, for example, the incumbent system, the existing system says, somebody is suspicious, but the AI systems say that it's not. Do you have a process in place? How do you reconcile this? Do you have an operational flow guide to guide the officer, and how do you actually make sense of the different information that's being picked up from the new system and the incumbent system? So these are key elements, and I think the word that we often use here in FICO is operationalize. Make sense of it, make it flow, and make it efficient, and make it effective.
Thanks, Timothy. I appreciate that was a tricky question. Sean, what about you? So I guess we're really talking here around how could we be more effective? Using some of these great techniques in solving the business problems you described, but on a broader scale. Do you see opportunity for kind of sharing, pooling on this issue?
Yeah, look, absolutely, I do. I think one thing so I've been in this space for just coming up to 13 years now, and one thing that I think I've really observed and learned in that time is that the key thing with all of these sorts of technologies, whether it's detection, investigation, KYC, anything else, is that financial crime and actually the organizations that are subject to financial crime don't stand still. So I think that a good financial crime system has to be something that's able to evolve. It has to be something that's able to change. It has to be able to adapt to new regulation. It has to be able to adapt to new threats. So we've already been talking about kind of the emerging threat in some areas like trade and trade-based money laundering. And it has to be able to evolve with, the product and operational landscape within the organization as well. So I think that, and I think this is one of the areas where we do see a lot of collaboration between financial institutions in this space, and actually we see it amongst our customer base. So our customer base kind of get together almost independently of us and talk about the techniques that they can use within the platform, and that the things that they've developed themselves within the platform that have worked really well. So I think that I guess pooling of learning and experience helps the whole industry evolve with the threat landscape. And I think that is also, that's amongst the organizations, so the regulated entities. It's amongst the technology providers who play in this space, and of course it's amongst the regulators as well. And we are starting to see a lot of collaboration in that space. And I know that obviously all of the regulated entities in Australia have a close relationship with Austrac, but we're seeing Austrac actually actively engaging with the vendor community a lot more now as well, which is really promising to see.
Thanks, Sean. And John, I guess, I think what Sean just said was really interesting around, obviously there are structures and there are restrictions that we need to kind of work within, but even just the small things around, sharing within industry or within select groups, techniques and approaches. Is that something that you think about a lot in terms of, honing and refining your techniques among your peer group or global peers?
In short, yes. The reason why I say in short, yes, definitely. We're always looking at information sharing, and I think the success of detecting and deterring financial crime stems from sharing of information, whether it's intelligence or otherwise. And I think it's open in Australia, given some of the restrictions that we have in place around sharing from private to private organisations, but there's a lot of work going on, and Austrac are actively engaged with us on how we do that. Obviously in the Fintel Alliance, working through that sharing of information is one mechanism that we are working towards as an industry. I'd bring it back even just into the organisation and how you share information within the organisation, particularly one which is as large as CBA, bringing that together, and then how do you share that within your peer organisations, and then with public sector information, law enforcement. How do you bring all that together? And that's something that we're actively working on with Fintel. At least sitting on the Fintel Strategic Advisory Board, it's an active conversation going on there in relation to how we can better do that. We are looking at international peers. Fintel was one of the first established, but there's lots of equivalents in international jurisdictions now And that is where we're trying to pull that intelligence from the way other countries have done that, and how do we pull that together into Australia to enable that information to be shared amongst everyone. And that way we can be far better as a nation around how do we prevent this type of crime continuing within Australia.
Thanks, John. Maybe just going back to some of the use cases, because I think you all make a really good point in that while the technology's been around for a long time, where we're really seeing the advancement is how you're applying it. Sean, you talked about some examples, but what else is happening offshore that we should be learning from? Where are you seeing experimentation that we should be considering here?
So I guess I think the first thing I would call out is that I think Australia is doing well in this space. So I think that we certainly, in terms of the experience that I've lived through over the last sort of coming up to 4 years since I kicked off Quantexa in this part of the world, we've built a good business here, and that's because organisations in this part of the world are receptive to adopting kind of new technologies and new techniques. I think probably going back to what I was saying before, I think actually we're seeing a big wave of change in Australia, specifically with regards to kind of financial crime detection, investigation, optimization, etc. And there is a lot of change going on in the KYC space as well. But I think what we've seen back in Europe is I guess, much more openness to taking on completely disruptive new techniques in the KYC space. So I'd say that's maybe one trend that we're seeing offshore, which I think it would be very beneficial to Australia to start adopting some of those more disruptive techniques in the KYC space. And that's specifically related to some of the things I was talking about before around kind of perpetual and trigger-based KYC. I think that's the new paradigm in terms of managing and tracking customer risk. I think in most of the jurisdictions around the world, it is a vision, but we're starting to see it become a reality now in Europe in some very large institutions, and I think that's a really exciting shift.
Timothy, what about your perspective? So, obviously FICO's got a global presence. What are you seeing globally that we should be thinking about in Australia?
Yeah, there are a couple of trends that's going on globally. I think the one that we've seen is the collaboration between fraud and money laundering, in the space of the financial institution, is seen as more a financial crime rather than just different divisions. The ability to share information, if you have a suspicious person or entity, you may want to share this with your colleagues in the fraud or the money laundering department, compliance department, being able to highlight this person and share this as a highly suspicious person to do business with other departments. So there is a trend now towards a convergence between the fraud space and the financial the traditional money laundering space, and looking at it as a whole financial crime. So that's one perspective, and I think that is being picked up by a lot of financial institutions now, exploring this as information sharing, and ultimately being able to derive more meaningful intelligence from the data itself. So that's one perspective. And I think the other perspective is actually a collaboration, a sharing. John mentioned some sharing and some techniques, and I really echo that, because financial crime, the more you share, the more you have the ability and the intelligence to actually detect some financial crime. But what we've seen globally is not just sharing derived information, but actually sharing data. So again, I mentioned non-PII data. We've seen consortiums being formed where like-minded financial institutions actually pool their data together to be able to come up with trend analysis of money laundering techniques or financial crime techniques globally that actually may come from US or Europe, or maybe originating from somewhere in Asia Pacific. So these trends actually, they move the mafia organizations, the syndicates, they actually move their operations from regions to regions. So being able to detect that at the data level, being able to run it with the mass of data that is being pulled together as a consortium, again, obviously non-PII data, That's actually a especially powerful collaboration, and it really comes down to coming down to some practical and realistic outputs that you can actually derive from this data itself. So being able to share globally would actually allow you to glean more from the data that you put to the pool, the consortium, and then actually you get back from there. So those are some of the trends that we're seeing globally: convergence and pooling of data.
Thanks, Timothy. John, maybe just picking up on some of those use cases that Sean and Timothy have referred to. Are those the sorts of business problems you're seeing reporting entities grapple with, including CBA grapple with in Australia, or what other business problems do you think have been problematic for traditional technology to solve?
Yes, it is the same. If I go back to what we were talking about before, whether it's crypto, whether it's trade-based money laundering, we're seeing more and more of that happen. And therefore, how do we get our systems aligned to identify that and then detect it and then mitigate and manage it? Now, that's not been really a focus of our core systems. And the way I would look at it is that's your base layer. And then we start layering all these other different technologies over the top, and that builds your ecosystem of your transaction monitoring, to put a term to it. And I think that's really the essence of what we're trying to do, is not have one system, the traditional aspect of looking at monitoring, but we build that ecosystem around all these different use cases. How do we do it? And I actually like the way Sean paraphrased it when he was talking before around detection, optimizing, and then investigation, and I'd add intelligence in there as well, and that forward-looking element. If you break it across those three elements, then you may not have one system doing all that. You may have a number of systems pulling that all together. And I think that's critical in the way forward of how we develop. I've got no doubt into the future we will get to that, what Sean is talking about around trigger-based KYC, and I think that is something which is critical to the progression in Australia around identification. And when you start looking at the amount of identity theft, and a little bit what Tim was talking about, where you start merging in fraud and cyber and all these other elements coming into an ecosystem of intelligence, when you look at KYC, historically the way organisations have done that has to change. And I think dynamic systems which can have real-time customer risk assessment built into them, and then you feed that into your ecosystem of monitoring, is really the way forward. And then how you disposition that. Now, ultimately, that is some years off for a lot of the large institutions, but it's certainly something that, as we talked about at the beginning, we will progressively be working towards that in our data and in our architecture going forward.
And just something I was thinking of as you were talking there, John, maybe a follow-up is, if I guess we think about these things in terms of, being able to provide better intelligence and, mitigating criminal activity, which is certainly, the number one priority. Do you also think about these investments and these advancements in terms of being able to take on more risk? So in the sense of, you talk about trigger-based KYC, crypto, trade-based money laundering, things that perhaps have caused financial institutions to perhaps take a conservative view. As you get more confident using these techniques, does that help you take on more risk?
It's a good question. I think, we're still a for-profit organisation, and I think we are just trying to find the negative, bad eggs within our customer base, and 99.9% of our customer base, uses our products for the purposes in which they're created. And so therefore, any investment we make into the financial crime world, we need to be thinking about, A, is it returning what its purpose should be? And secondly, what's the customer experience into that process, and is it seamless? And for the 99.9% of our customers who are good, is that process seamless for them, and is it a good experience, and they don't get deterred by the fact of those processes and go elsewhere. So yes, the better we are at that, the better the investment. It will be a competitive advantage at a point in time into the future. And if we can get there, the better we can get there, and the better we can keep the 99.9% of our customers happy and keep that small percentage of bad customers off our books.
Thanks, John. Conscious of time, and that's gone really, really fast. Wanted to just, as a sort of a final wrap-up question, just throw it open to all of you. Maybe starting with you, Timothy. What advice would you give an organisation that wants to explore the opportunities presented by these sorts of technologies for financial crime?
I think the first would be what I echoed. Don't just throw out something that you think is not working and replace it with something completely new. Try to accommodate, find a common line of synergies between the whole, which has its value and its intelligence. Figure out the process and the methodology, and where the legacy system has its value, and derive from it. And I think maybe the one of the more important points is actually build the confidence in the advanced technologies. Feed it the best quality you have. I mean, the data quality is always going to be an issue, but do what you can and slowly build the confidence in it, so that you have the confidence as an organization to use that result and base your investigation techniques and detection and monitoring based on that new advanced technologies. Confidence is going to be important, and of course, as the regulator sees the critical mass among the financial institutions starting to pick up, then it's going to be encouraging more, and it's going to pick up faster and faster.
Thanks, Timothy. Sean, your kind of very brief advice.
I think most of these things have been covered already. Start with the business problem, work back from there. Focus on getting your data foundation right. Don't buy a Ferrari and then fill it with crude oil, but also balance that with not waiting for the data to be perfect. So find that sweet spot, do enough work on the data to make it meaningful, and then get started. And start small and focus on quick wins. Don't go big bang. Take an approach that focuses on extracting value as early as possible, and taking a phased approach. Those are probably the three main things I would draw upon.
Yeah, good tips, Sean. And John, maybe just briefly, last comments from you on that.
I would agree with all of those comments. I would just add something over the top of that based on the last 3 years' learnings, is to have an architecture plan and really bring that out into the future, and know when is the right time to bring in and use technology. And as we've talked about here, that's some of it's early and some of your data uplift, and then you bring it in incrementally in line with that architecture moving forward.
Thanks so much, John. And look, thanks to all of you for joining. We're at time, but I am about to throw to a pretty exciting next step for the conference. We've now got a showcase of some of the great RegTech innovations that we have. So next up is a pivot into what's possible with PitchFest 2021. So enjoy, everyone.
Well, welcome back. I'm incredibly excited to move on from the panel and dive straight into the Pitch Fest. So this afternoon we have 6 pitchers from 6 amazing RegTechs that are based all over the world. And I think in terms of house rules for this afternoon, each pitcher is going to have 4 minutes to present their solution. And what is going to happen is at the 3-minute 30 mark, I'm going to dive back on screen and give them a light nudge to let them know that at 4 minutes, we're going to be cutting their presentation short. I'm going to be firm but fair this afternoon. And then we're going to have 2 minutes of Q&A between our judges. Now, after each of the 6 presenters are finalised, we are going to have a short break. We're going to hear from Senator Andrew Bragg, and what we're then going to do is then come back and announce the winner this afternoon. So without further ado, I'd like to introduce and to welcome each of our judging panel for this afternoon. So we have Deona Ray, who is the Chief Controls Officer here for the Commonwealth Bank of Australia within our Technology and Operations Division. We have Julia Strain, who is the Executive General Manager of Corporate Services, Operations and Technology here at CommBank. We have Ian Polari, who is the Head of Banking and the Global Co-Head of FinTech for KPMG. We have James Tinnan from Square Peg Capital. So judging panel, welcome, and thank you for joining us this afternoon.
Thanks, Jesse. Good to be here.
Thanks, Jess.
Thanks, Jess.
No worries, that was awesome. I was expecting everybody to say everything all at once. It would have been a perfect little kickoff to a virtual panel. So thank you all. Without further ado, we're going to dive right into the pitches, and I'd like to welcome Craig Talbot from ASIN to kick us off.
Hey, good morning, good evening, good afternoon, everybody. I'm Craig. I'm from ASIN. We're here in the UK. I'm coming to you from very dark Goodwood at the moment in West Sussex. So I want to take 4 minutes just to talk to you about the innovation that ASIN's bringing to market. So ASIN, we're digitizing op risk, and we've created a peer-to-peer digital calibration platform for operational risk and non-financial risk. The business was born out of banking. Paul Ford, our founder, was COO for Barclays Wealth, and prior to that for global markets for Credit Suisse in EMEA. So we've seen the pain points that the industry's faced with. Paul spun up a professional services business to work to solve it and realised there was a better way of doing it, and that's how ASIN was founded. In October 2020, we secured our A round from Fitch Ventures and also from Notion, one of Europe's largest SaaS-based VCs. Next slide, please. So what is ASIN about? ASIN, as I say, has built an op risk platform that to operational risk is equivalent to what Bloomberg is to market risk, or what Moody's or Fitch is to credit risk. What that gives us the opportunity to do is we've come to market with unique technology that allows us to benchmark data anonymously, forging interconnections that have been continuously improved, and gives us the ability to build a sort of neural learning network, on the foundation of very sound data protocols. So that gives our customers, of which we have 12 global tier 1 banks on the platform today, plus some additional more local banks that we're also working with in the US, or sort of state banks that we're working with in the US. So that gives our customers the ability to see, are they ahead of the pack in terms of risk, or are they behind the pack? Do they have too many detective controls? Or do they have too many preventative, and not enough preventative controls, for example? So, or vice versa. So that ability, that insight to actually digitize that approach moves the whole basis of the industry around non-financial risk from a sort of qualitative decision-making process to truly quantitative. It's no longer subjective. It's data. It's fact. This is a cloud-based SaaS platform. It's not a network of people. We're using technology to create a network that gives true insight that's digitally based. And of these banks, 4 of these banks are now moving with us front to back. And once you've gone front to back, so front office to back office, sales and trading, corporate finance, and now moving into other sectors of the banking world, it gives the banks the opportunity to truly see, their map, their end-to-end operational risk processes, and truly see where their gaps exist. And that's quite interesting when you're starting to think about things like anti-money laundering. I know that subject was talked about earlier on, because without sort of having a true view of KYC across the bank. It's very, very hard to determine that, and we help solve for that. Next slide, please. So the challenges that we're facing, op risk management is fairly subjective, and of course, if you get it wrong for the people in the SMR, the fines can be significant. That the issue and the exposure for the banks is significant. People are getting locked up. All the potential is for people to be locked up, go to prison. So it suddenly becomes quite a serious thing, and it hasn't been focused on from a quantitative perspective, like ASIN are able to do, and we're the only people in the market that can do that today. So we're moving our banks away from manual processes and spreadsheets, moving away from qualitative to quantitative. Next slide, please. And the value that we deliver is really born out of the true insight that data provides. So it's through that, we give organisations the opportunity to be really factual about where they stand and how they remediate. What they need to remediate, therefore, how do they avoid fines? How do they protect their reputation? How do they make sure that their resources are effective? Are they over-controlled? We're talking with a bank in Holland at the moment that's a retail organisation. They've got significant duplication of controls across their European business. How do they dedupe those controls? Which ones do they take out? Which ones do they keep? Having that true insight is really the only way you can do that, when you're comparing that across a network of other banks, so that you can see which controls are meaningful, which ones are, where you've got over control, where you've got duplication of controls, where controls are badly written, where they're not written to the standards driven by the regulators. Most of our controls are mapped to the regulatory standards. Next slide, please.
Well, Craig, I think we have just hit the 4-minute mark. So thank you so much for your presentation. We'll now throw it over to the judging panel for their questions.
Thank you.
Hi, Craig. It's Julia here. So what's it, about 4 o'clock in the morning there or something?
It is 20 to 4, yeah. There you go.
Oh, congratulations for being on and being so bright. One of the things I want to ask is, look, I understand the proposition. Thank you very much for your pitch. I think this is valuable. It's something that we sort of, most banks are looking at. I'm interested in the insights you say that it offers. I understand the digitization, I understand the information it gives, but when you say insights, what sort of insights are you talking about?
Yeah, so there's 2 types of insights. So the insights that we get from the platform, so people at the operator level, sort of the people actually working with the technology day to day, can see, live, where they sit relative to their peers around op risk. But then also we provide a series of different insights where we map events that are happening in the world today, and we map them specific to your regulatory risks and controls based on the view that we get from the network. So you can see exactly where you stand to the latest things happening in the market.
Quick question from me, and thanks again for the pitch. Presume that the residual risks that you're using in the dashboard are based on self-assessment by the entities, or is it based on some other input from auditors or regulators?
So the way that we work is when we land at an organisation, we take their risk and control data. Okay, it's obviously anonymized in our data. So we take risk and control data, we ingest it into our platform, and any bank can view their control and risk language and their landscape through their own risk and control environment through their own language. So they can look at their own language, or they can flip it into the ASIN view. So we've created a whole set of data technical standards around the controls that we import into the platform, and we do that because we use AI and NLP to really sort of build those standards and figure out what controls are. Lots of banks will have one control written as a single word. I mean, we've seen that, and that's not a control. And we see controls with 1,000 words. That's not a control either. So we're trying to build that standard. So the ASIN standard for controls, and those controls, those data technical standards, are mapped to the regulatory requirements. So like MiFID, PRA, etc., etc. Does that help?
Yeah, it does. Thank you.
Great.
Craig, I was most interested in the peer-to-peer aspect of what you are doing and your ability to show a bank how they compare to their peers. How do you do that without kind of breaching one bank's confidentiality? What's the way that you can kind of get that peer-to-peer magic working?
Yeah, so no one bank can see the other bank's control language. So they see it in their view, or they see it through our data technical standards view. So there's that complete sort of anonymous approach to anonymization of the data. But then part of this process as well is that there is a human side to this, and the human side is that we have monthly advisory boards that we run, where everybody gets involved with those those boards to ensure that they're actually trying to shape the standards of the industry. So it's not just about the platform, it's not just about the insights that the platform drives, it's also about the human side of this and how we actually work for a better world in operational risk.
Craig, a question from me, if I can. I'm really interested. I know you mentioned there's a few different elements of value drivers for your clients. What would be the single largest driver of value or benefits realization for your 12 customers that you're working with?
Today, I would say it's calibration against the market. So they get to calibrate their position against the market. Are they ahead of the pack? Are they behind the pack? And it sort of gives them the ability to say, have I got a larger risk appetite than the rest of the market today, or have I got a lower risk appetite than the rest of them? So am I over controlled? Am I under controlled? And then they can go into the platform and they can see, okay, these are we provide a readout which is pretty live, and it gives you a view of where you're over controlled, where you're under control relative to your peers, where you have duplicate controls, okay, so where your controls could be duplicated, and where those controls could be badly written. So there's a whole opportunity here for a significant cleanup based on the readout that you get. But I think a primary thing today is am I safe? And for the people in the first line, they really care about that.
Perfect. Well, Craig, thank you so much. And panel, thank you so much for your questions. We're now going to hand it over to Yvonne from APAX. Yvonne, over to you.
Thank you, Jesse. Hi, I'm Yvonne, the APAC Business Lead for APAX. It is our honor to be one of the finalists here, and thank you, judges, for giving us the great opportunity. APAX is a RegTech company with a goal to transform all complex text-based regulatory rules into digital, machine-readable rules, providing binary answers. Next. As you know, compliance is changing dramatically. Our clients still have many manual processes in day-to-day workflow, which lead to slow decision-making, poor client engagement, spending too much time managing regulatory compliance manually. And yet at the same time, they want to have more growth, more revenue, less risk, and less fine. Is that possible? Next, please. Let me take you through a good analogy of what today's compliance journey looks like. It's like paper maps. The rules and legal opinions are still mostly paper-based, or some argue that they have digital rules. But scanning paper documents into PDF is not what we see as digital rules, because you still need to interpret it on your own. These so-called digital rules are not kept up to date in real time. You will get lost or make wrong turn with scanned paper maps on your mobile phone, since you still depend on someone who can read the map, or the compliance manual to guide you to the destination. Next. However, if you have a sat-nav or GPS, life is a bliss. Almost all of us here today have ditched the paper maps and depend on GPS. APAX is your GPS in the compliance world. Our rules are at your fingertips, and the content is always updated and distributed in real time. Instead of days or hours, you now get your most pressing legal issues in seconds. We provide you with binary answers, hence interpretation has been taken care of. Next. Here's an illustration of our cross-border compliance use case. Jimmy, a Singaporean licensed wealth manager, has a potential Indian prospect Proti who lives in Sydney. Jimmy will need to consult the country manual to find out if he can organize a meeting with Proti. Given the multi-jurisdictions involved here, it is not going to be straightforward. Imagine him with the paper map from our previous analogy. He will have to consult his compliance officer on the do's and don'ts. And this will take days, or if he's lucky, a few hours. However, if he uses APAX, he will be able to know the answers in a few seconds. Here's how APAX will help with Jimmy. Next. We have more than 55,000 digital rules off the shelf to meet multi-jurisdiction scenarios. These dependable and up-to-date rules are delivered by world-class regulatory experts and law firms. The rules are built once and used many times, hence highly scalable. Jimmy will be able to find his answers from these rules via the browser-based app. Next. Our browser-based app is a fast answer to no integration. He can use it anywhere as long as he has a browser to check his legal answers. Next. The Apex platform is the compliance hub, the tool for the legal and regulatory experts. Jimmy's compliance team may edit their risk appetite or add additional internal policies to the rule sets. These rules are immediately available into the digital format. Next. Last but not least, our rules are easily integrated to your day-to-day workflow and any system with our secure and lightweight API. This can be integrated into Jimmy's day-to-day workflow with the rules they have subscribed to. Next. We have built many use cases over the last few years. Visit our website to learn more in details of our use cases, and they're updated regularly. Next. Apex has also proven that we have an award-winning great solution. One of our global clients, Credit Suisse, was recognized as the best private bank for the use of Regtech globally because the solution has delivered what it has promised. Next. Want to know more? Reach out to us and I'll be happy to share more about our business model, our case studies, and our solution. Thank you.
Yvonne, well, thank you so much for that presentation. And I'm sure Deb, who is backstage, will be incredibly happy that we have run to time. I've also just been given the hook that we are only allowed to have 2 questions in our Q&A from now on. So I don't know who is going to have the first crack, but James, go for it.
Hi, James.
Thanks so much. Really great presentation. Question on your website, and at the end there, it kind of seemed like it says, you know, together we'll build a solution. And I guess I was wondering how much for each new client is off the shelf versus how much are you do you need to go in and really help build and craft something for a new bank?
Okay, so most of the time it's off the shelf because our client is able to subscribe to our rule as a service, as I was sharing earlier on, 55,000, more than 55,000 actually. And these are actually contributed by our content partners that we work with, the consulting firms and the legal and the law firms. Separately also, when the client have decided to use their own rules, that can be also added into the whole rule dictionary database.
Awesome.
Thank you, James.
And then Dee.
Yeah, hi. Thanks, Yvonne. Quick question. You mentioned that there's binary answers to the rules engine. How does it deal with conflicting rules? Is the first question, because there are often conflicting rules, particularly between multiple regulators.
Okay, so all these rules, why binary? Because these rules are actually legal opinions from our consulting firms or law firms. So it goes through a decision tree. So based on what answers that it kind of lead you right to the final answers. So obviously there are times where there are a bit of gray area. So we will highlight that in ample. So with the different taxonomy and why, it's all written in on the screen. So the RM or whoever's using it is able to refer to it, or that's where they will go back to their compliance officer.
Thank you.
Awesome.
Welcome.
Well, thank you, judges, and thank you to Yvonne. I'd like to introduce next David Barros from Digital X. David, come on up.
Hi, everyone. Can you hear me? I'm David Barros, the Chief Product Officer of Digital X. As a publicly listed company, we have seen firsthand the challenges with managing and enforcing good corporate governance systems and processes. That's why we created Drawbridge, a digital governance platform to help other publicly traded companies eliminate risks through inbuilt compliance by design. Next slide, please. Also, as a publicly traded company, I need to quickly tell you there may be forward-looking statements in this presentation. Next, please. But our story actually starts with Albert H. Wiggin, who was the president of Chase National Bank in the United States from 1911 to 1930. What Wiggin is most remembered for, though, are his actions before the 1929 stock market crash, where he personally short-sold shares in the bank to such an extent that he was financially incentivized for the bank to collapse. After the market crash, Wiggin made a profit of more than $50 million in today's money. As a result of all the controversy and the public outcry, legislation was passed that was nicknamed the Wiggin Provision, which was enacted to prevent company directors profiting from their own company's demise. But because there were no laws at the time, Wiggin actually did nothing illegal, which just shows how far compliance has come in this space, or has it? Next slide, please. Failures in companies' trading policy compliance isn't just limited to the high-profile cases of insider trading that we only see in the news. It's actually a far more common occurrence than what you might think, and although it's less severe, there are frequently instances of near misses and mistakes with employees and directors trading in company securities when they shouldn't. Next, please. All publicly traded companies on the ASX are required to have a securities trading policy. I've put two up here. The one on the left is Commonwealth Banks, because I know we have some judges on the panel who might be familiar with this one. And the one on the right is an unnamed tech company, unless you can read the really small writing, that still uses a handwritten manual paper-based form for their share trading approvals. Next, please. These manual systems and processes cost time and increase governance risks. There are over 10,000 change of director interest notices lodged on the ASX every year alone, but they ultimately have the same outcome of damaging corporate reputations and market integrity. One ANU study found that director trading is rife among ASX company directors. Next, please. That's where drawbridge comes in. Compliance managers can track restricted trading periods and their policy rules. Directors and staff can view dates for when they can and can't trade and make a request for approval. And drawbridge automates the approval logic and creates a digital audit trail to identify issues before they become a problem. Next, please. Since launching our product in November 2020, we've gained traction with 4 ASX-listed companies using drawbridge to digitise their securities trading policy. But for us, securities trading policies are just the start. The fundamental problem we solve is the lack of trust in corporate governance, and we have a roadmap to achieving our vision, which is to become the digital governance standard for the world's 630,000 publicly traded companies. Next, please. We're one of the first companies to access the ASX's test digital asset modelling language platform, which we're building on in order to embed governance rules and policy protocols into the transaction logic of our digital systems and processes. Just like open banking is enabling access to consumer bank transaction data, we see the ASX DLT platform as the share market equivalent by providing access to listed companies' securities holder data. With access to this data, we're on a mission to eliminate corporate governance risks for public traded companies. If you'd like to learn more, please visit our website at opendrawbridge.io. Thanks very much.
Perfect. And thank you, David. Okay, judges, who has got our first question?
Maybe I can kick things off. Thanks very much, David. Just a question around how much of a priority is this as a problem to solve for corporates, the ASX listed community. I think you referred to 4 already coming on board. That would be my question.
Yeah, that's a great question. The feedback we're hearing from customers is it is a clunky, manual, burdensome pain point. But you're right, it's not something that typically a listed company will do lots and lots of times per year. So we're looking at, in terms of our target customer segment, the larger end of the market where they have more employees, more key management personnel that are subject to that policy. But what we're really seeing is a lot of companies in the financial services space, maybe investment banks, for instance, need to manage policy approvals across a number of different companies at the same time. And that's really where the pain point escalates. So, yeah, thanks.
Julia.
Hi. So thanks for the presentation. Just a question on whether you see any further use of this. You're collecting good data, so it's a share approval scheme, which is good, and I can see this for banks. Can you see using sort of other technology, machine learning or anything, a broader use for this?
Yeah, absolutely. I think what's really interesting is once you start collecting this data, because it's really somebody's intention to trade, and then with the ASX DLT platform, we'll be able to match up the request or the intention with the actual trade that happened. But simply having visibility into the intent of your key management personnel, directors and employees gives you a really good insight into the movement of shares. And one of the things on our roadmap as well is to enable a share sale facility. We've spoken to a number of companies with a big international presence and there's international employees. Don't know where to begin to sell ASX shares. So yeah, absolutely. Once you have that data, there's many, many things you can do.
Thanks.
It's perfect. And David, I loved the fact that you managed to get a hold of our group securities trading policy in your pitch as well. Well, up next, we have Jonathan Dreschler from the team at Recordshaw. Johnny.
Hey guys, hopefully coming through loud and clear. I'm Johnny Drexler, Head of Business Development at Recordshaw. Delighted to be here. Really appreciate the opportunity to pitch. So thanks all for your time. Next slide, please. Recordshaw is a UK-based regtech that's been helping financial institutions in the UK and Australia overcome the previously insurmountable challenge of how do we assess 100% of our customer interactions rather than really small samples without just throwing more and more bodies at the problem. And we've seen insufficient controls, low sample rates, poor record keeping continually lead to some of the largest remediation projects and fines in the industry over the last 20 years. And in a time when the number of channels customers interact over is on the increase, appropriate monitoring is becoming more and more of a challenge. So for that reason, we've developed a platform that can capture and assess 100% of your customer interactions. Next slide, please. So we started our journey in voice, ultimately identifying a gap in the record keeping associated with customer meetings, and built some software that allowed us to either record or ingest meetings that are taking place within a branch, field, video, or contact center environment. This enables firms to create a central repository that can unify and link customer journeys across all of those channels. And after tackling the challenges associated with the voice, we replicated that approach to be able to ingest and analyze all the written communication and documentation that sits within a customer journey. Most importantly, we then asked ourselves, what do compliance and risk professionals need to understand from that data once we've captured and organized it for them to improve their oversight and the efficiency of their reviews? So for the last 8 years, we've been working with compliance SMEs to create market-leading voice and document analytics capabilities that can be utilized at scale and in the most complex financial services environments. Next slide, please. Alongside compliance SMEs, we employ some of the leading speech and language scientists globally who work to ensure that our speech and document analytics platform is at the absolute cutting edge of what's available. What makes us particularly unique is that the platform is trained exclusively on real customer interactions in the domains with which we apply the technology. And therefore, the platform's built to understand the nuance and complexity of language in even the most unstructured client environments. And everything from our proprietary AI transcription engine to our machine learning classification and summarization models have been built to understand the context of the interactions that they're analyzing and assess the conduct of an organization rather than just simply looking for whether relevant disclosures have been given or committed to a document in some way. We provide human levels of accuracy when we assess really significant data points and are relied upon by some of the largest banks and insurance companies for both everyday banking activities, but also some of the large remediation projects that they're running as well to assess historic voice and document data. Often we need to demonstrate to the regulator, not just our clients, that using this technology won't put customers at a disadvantage. Next slide, please. Used at scale, often pointed out, automating QA assessment and identifying risks around things like vulnerability and complaints. We also deliver a huge amount of insight that enables frontline efficiencies and the ability to provide targeted feedback and training, and then ultimately improve average handle times, net promoter scores, conversion rates, and all the things that will ultimately lead to better customer outcomes in the first place, which is the goal of driving better compliance in the first place. I see Jesse, so I'm gonna wrap up there rather than go any further and open to Q&A. Thanks for listening.
Thank you, Johnny. Okay, Dee.
Thanks, Johnny. Quick question from me. How do you approach the sort of the privacy issues associated with this, or is the data that you're working with cleansed for that?
Yeah, great question. So we're either utilizing data that is already within the bank's privacy rights to be accessing and utilizing. You know, if you call a contact center, you'll get the message that this data could be used for training and compliance purposes, right? So everyone's used to that. What's really interesting is where we're pointing this in areas that haven't traditionally been recorded. So video conferencing and branch environments, for example, where you are obliged to get customer consent. And so we do a huge amount of work with our customers on the positioning of the technology to make sure customers are really comfortable with the reasons that they might be recorded. And actually, if positioned effectively, this should be seen as an advantage as much to the customer as to the bank, right? Because it's an authoritative record that they can utilize to make sure that what was said to them was done. And they can refer back to, some banks give customers access to this data to be able to refer back to and make sure they're really clear about the conversation that was had, rather than leaving any sort of lingering questions. But some navigation is required, and it's all about the training and positioning ultimately, where it's not already part of the security protocols.
Thank you.
Thank you.
Johnny, I just wonder who is the buyer for this within your large customers, and what are they most excited about?
Yeah, great question. So historically, we've gone in through the compliance and quality assurance teams, where they are driving significant efficiencies and cost savings in the way that they're able to review data. And quite often, with a lot of our early clients, that is where the business case was driven. And ultimately, we're digitizing data. And think about voice data, right? You digitize it, you've got a mine of sort of gold there that you can go and sort of unpick. So often now it's heads of product, heads of distribution, and COOs that really are very interested in this data to get real operational insight in terms of what's working, what's not, where can we improve things upstream to deliver a more effective interaction further downstream. And increasingly, it touches a lot of people in the organization. So it's then about, you know, which pain point do you want to solve first? Let's start there, and then let's expand out how you're utilizing the platform.
Awesome. Well, Johnny, thank you so much for your time. And I'd like to now welcome Mark to the virtual stage from Theta Lake.
Thanks so much. Great. So we'll go ahead and get started. Hey, I'm Mark Gilman. I'm the General Counsel and VP of Compliance at Theta Lake. We're a compliance AI for a digital-first world. Next slide, please. So in this new pandemic normal of work from anywhere and remote working becoming the norm, this kind of business change is really being driven and supported by collaboration and dynamic chat tools like Slack, Zoom, Microsoft Teams, and WebEx. And so the introduction of these new tools has brought new risks to the forefront that firms have to manage. Next slide. And so those, if this slide had presented properly, you would have seen a pinwheel here, but there we go. So there are really kind of three dynamics to the potential risks that these new platforms introduce: regulatory, privacy, and cybersecurity. So from a regulatory perspective, there are concerns about how folks are providing investment advice or providing disclaimers and disclosures and having client interactions over these platforms. Are they sharing things on the screen share or whiteboards, et cetera? A lot of risk there. From a privacy perspective, there's concerns about the sharing of sensitive PII, from email addresses and birth dates to tax IDs, whether that's through the file sharing or chat mechanisms of a Slack or Zoom. And then finally, the cybersecurity concerns around individuals visiting websites that might contain malware or inappropriate behavior, or even sharing sensitive and confidential documents, again, through these screen shares, through file transfer mechanisms, et cetera. Next slide, please. So Theta Lake is really built to help organizations manage all of these risks. We are global in nature, so we have data. So you can tell by my accent, I'm American, but we have data centers in Australia, UK, EU, US, and Canada. And so what we do is we have roughly 45 direct API-based integrations with all the leading collaboration and chat platforms. We ingest all the data directly through those platforms, and then we use machine learning, natural language processing, and computer vision to look at what was spoken, shown, and shared during those conversations. So we look across the whiteboards, webcams, screen shares, chat, file transfer to detect those regulatory, privacy, and cybersecurity risks. And then we surface them back to compliance teams in a unified review workflow. Next slide. And so I wanted to end here then with a quick kind of case study with an Australian client of ours, Tupakov's, great client, and how we help them manage their compliance for Zoom and for Zoom phone and Zoom video. They're ingesting around 50 plus hours a week of that content and have gotten the kind of human review aspect of it down to less than 4 hours a week. So using those AI detections to figure out if there's privacy, cybersecurity, or regulatory risk inside of the content, and then analyzing it and reviewing it based on those reviews. So really kind of driving that down to, you know, a 10%, less than 10% of the time of the total recording spent on the reviews. So you can imagine how this can scale across larger volumes of voice, collaboration, and chat data, again, including all of those kind of visual dynamics, whether it's emojis, GIFs, and all of the kind of content and collaboration features of Zoom and Teams, et cetera. So thanks for the opportunity, and I'll pause there.
Fantastic. Well, thank you for the presentation, Mark. Judging panel. Julia.
Hi, Mark. Yeah, hi, Mark. Thanks for the presentation. You mentioned scale towards the end. That's really my question. I'm sort of thinking from a CBA perspective, just the number of meetings, sessions, calls, etc. How scalable, how truly scalable is this?
Yeah, we're incredibly scalable. So we're based on both AWS and Azure. We run on either based on kind of customer desire. And, you know, we have large enterprise clients ingesting thousands of hours of data every day. And, you know, we're built to handle that kind of volume. So it's not an issue for us.
Well, I'm thinking sort of not only scale, I think about the value of what you're doing. So you can collect all the data, understand that, but in terms of searching what you're looking for, compliance, how do you cope with that scale?
Sure. So we actually assign a risk score to every piece of content that comes into the platform based on those AI detections. And that, coupled with some complex workflows that we have, allow firms to find the right kind of highest risk data and analyze it as they wish. So we can filter workflows to route 100% of high risk data and a smaller percentage of low and medium risk data to a compliance team. Teams can even route based on geography or based on the collaboration platform that the data is coming from. So if you want to have the Zoom content go to one team and WebEx go to another, we can do it that way. So we kind of understand that the content is not all the same. It needs to be kind of treated with that kind of risk lens. So that's how we accommodate that.
Thanks.
Sure.
I can jump in. Mark, given that you're looking at so many different forms of risk, everything from a bad emoji to a GIF or to whatever, how are you training your algorithms to ensure that they've got such high levels of accuracy? Because it does seem like even a 10% human in the loop is still requiring a lot of human time.
Yeah, I mean, the goal is really to identify that high-risk content and then get it in front of the reviewers to analyze. We really want to make sure that we surface the right data for analysis. We're not, a purely automated platform, and we want kind of humans to be in the loop. In terms of the training, we use a lot of different data sources. public data sources and kind of real world data sources to train our data. And then we have machine learning techniques in addition that help us to take those seed sets and actually iterate them and make them kind of context specific and meaningful, despite what might be a smallish initial size.
Excellent. Well, thank you, Mark. And I'd like to welcome Lindsay Westaway from Verifier to come join us as our final presenter and pitcher.
Thanks. Thanks, everyone else. Try and be nice. I'm pretty young. So just to reiterate, my name's Lindsay Westaway and I'm the sales and marketing lead at Verifier. I really appreciate the opportunity to share with you today an answer to an old problem that we've discovered. So can I go to the next slide, please? Slide 3. So hardship's always been in the dark ages and it's time to bring it into the future. I just wanted to start by asking you a few quick questions though. Are you tired of manual processing yet? Is it better to use your resources where they're actually required? Are you ready to deal with the triage of existing hardship calls as well as the new ones that are going to eventuate from a JobKeeper? And did you know that there is an automated hardship solution available right now? So I guess 2020 wasn't a very good year. It's safe to say it's 1-0 to COVID. It was, however, good in the sense that we got a once-in-a-generation chance to really start to test our business processes. So why hardship? Well, hardship is an historically manual resource-heavy process. And this has severe consequences when you try to upscale your hardship capacity. So last year's challenges really need to become this year's learnings. It's really important to understand that whilst it became glaringly obvious that we needed to make changes, customer engagement and customer well-being still really need to remain at the heart of all of this. So next slide, please. How does it work? Well, we deliver the out-of-the-box end-to-end assessment and you do the fulfillment into your own systems. So consumer-facing screens with digital application forms enable customers to enter their details, all required for the hardship assessment to be completed. And using Verifier's proof of income solution in conjunction with HEM, we assess income, expenses, we use credit reports to look at liabilities, and OCR to capture relevant documentation. And all of this can be done, validated, assessed, and the decision fast-tracked before it's even reached your back office team. Or for existing hardship cases, you can use the verification modules to fast-track their reviews. Next slide, please. Your teams can access and manage all these hardship cases in a live queue using our operations portal, which is a secure web-based browser. Here, operators will be able to review cases and be prompted to perform tasks based on the automated assessment process, thus enabling humans to have human conversations where required. And then once a decision's then been made, your system can take over. As I mentioned earlier, customer well-being is really at the heart of all of this, and Verifier has done a lot of work in this space. With automation removing a substantial amount of that workload, you then have an excellent chance to have really compassionate conversations with people in poor situations and improve their financial literacy. As being one of Australia's first ADRs, we can provide your customers with an accurate assessment of their financial standing, and there's no losses in ever educating your customers. So all of this translates to better individual outcomes, better lender outcomes, but also to better industry outcomes. Next slide, please. I'd now like to share with you just a real life example of some of our customers. So here we can see on the average the case handling time was reduced from 3 days to 1 day. That's a 66% reduction in workload. That's a 66% reduction in work. We're pretty proud of that at Verifier. Just want to reiterate. With faster approval times, customers were given peace of mind in an otherwise very highly stressful situation. And 50% reduction in call center workload reduced everything manual and reduced that to happier staff. So again, 50% is not a small number. Better compliance was achieved, ensuring deadlines were met and also without human error. Next slide, please. But why Verifier? Well, first and foremost, we're human-centric and digital first. We're thought leaders and we're constantly innovating with the goal of enabling you and your customers to achieve better outcomes. We're a very proud RegTech with a proven track record built around trust and privacy. The Standalone Hardship Platform is a product of our innovation. Manual processing has been solved. Using the right people where they're needed, solved. Upscale capabilities, solved. And it's light integration. And we can also integrate the system at a later stage. Next slide, please. So we have successfully managed to bring hardship from the dark ages and into the future where it belongs. Your customers will thank you, your teams will thank you, and your bottom line will thank me. Thanks for your time.
Well, Lindsay, thank you indeed. Judges, who would like to fire off with the first question for Lindsay?
I'm happy to kick off. Lindsay, thanks for that. You mentioned you're an accredited data recipient. Have you actually got that working in practice with any ADIs?
Yes and no. So we've got our first product, which has been developed, and we're going to market with it at the moment. And that's called Safe Loan.
Right.
So question for me is, you talk about financial literacy and educating your clients, etc. How, in fact, do you do that? Because they're giving you information. How are you, in fact, educating them?
Yeah, so it's kind of a double-edged sword here. So we've got the hardship solution, and then we've got bolt-ons to that, one of them being the Safe Loan program. So the Safe Loan program is something that we developed with the Melbourne Institute, and it's an index scale of 0 to 100. So what we do is we send that to the customer, and they can rate exactly how they're feeling about their finances. Then what we can do is reality check that. So we take the CDR data, and we can say, well, you think you're down here, but you're actually up here. So it's all the learnings, and then we give them calls to action off the back of that.
Perfect. Well, Lindsay, thank you for your time this afternoon, and thank you to everybody who has pitched. I think there were incredible pitches, and really, really exciting to see us still be able to do things like having a pitch fest, albeit virtual. So for the time being, the judges are going to go away and they're going to head back into the green room, or the virtual green room, and they're going to deliberate and come up with a winner for this afternoon's pitch fest. And in the meantime, would love to be able to introduce an address from Senator Bragg. Now, Andrew Bragg is the Senator for New South Wales, and he was elected to the Senate in 2019. And in September of that year was appointed as chair of the Senate Select Financial Technology and Regulatory Technology Committee. And I think what's really, really exciting about the committee, and actually following on from the video that Senator Andrew Bragg shot last week, the Senate actually voted to expand the scope and length of the committee to further improve Australia's position as a global financial and technology hub. They've also changed the name to the Select Committee on Australia as a Technology and Financial Centre. And as stated by Senator Bragg himself, the work of the committee so far has clearly shown Australia is well poised for rapid growth in the sector, to attract investment and to create jobs. So, Senator Andrew Bragg, over to you for your address.
Our government is committed to creating more Australian jobs and improving consumer choice. And for that reason, the Senate Committee into FinTech and RegTech was established by the Morrison government towards the end of 2019. And this review has been conducted in two parts. The first part was a stock take. Where do we stand on FinTech and RegTech? With the second phase, which we're currently conducting, looking at how do we become the best in the world. In terms of the first part of the review, which delivered an interim report in September last year, that was focused on a few key areas. How we tax, how much capital is available, what sort of regulation is abound in Australia, and what sort of culture do we have? And all of those things amounted to a couple of dozen recommendations which we made to the executive government, a number of which were adopted in the budget last year in October. Of course, the budget was held in October to accommodate the COVID crisis, which I should say at this juncture that Australia has performed very strongly during the COVID pandemic. We've had the best health and economic response of any OECD country, and that is something for which we can all be proud. But that first phase of the review really was quickly adopted by the executive government in that budget, and the R&D tax arrangements, digital identity, are two significant investments that were made. But also in the RegTech space, there was funding and pilot programs announced in that budget. We recognise that RegTech is an important part of Australia's future, and that's why it's been an integral part of this Senate inquiry, but also a part of the day-to-day remit of the Minister who is responsible for this area, Jane Hume. And now Senator Hume, who's a good friend of mine and a good friend to the Regtech community, has recently been promoted into the ministry with a big focus on digitising business, because of course the pandemic has shown that to be digital is to be durable, and to be durable is to be alive. And so as a clever country, we embrace technology, we embrace solutions like Regtech, and that is what we're looking now in the second phase of doing more of. I mean, there are a number of fintech issues as well as some Regtech issues, but as you know in your industry, it's the fundamentals that count. It's the way you tax, it's your tax rates, it's your regulatory dynamism, it's your culture. All of these things amount to a level of capability in the environment which determines how successful any country will be in this space. And there are, as we recover from the pandemic, a number of areas where I think Regtech could really come into its own. We have tried to improve Australia's labour laws, and that's been a process that's been running during the pandemic, and we have legislation before the Parliament to improve and simplify our industrial relations framework. We want to revive enterprise bargaining. We want there to be a more simple award system. We want there to be longer term agreements. But not everything has been possible to agree upon during this process. And I think that's where Regtech can come in. Regtech can effectively simplify for businesses on the ground the complex and convoluted labour laws that we have to live with in this country. Politically, it's very difficult to get change in this area, and I give our government credit for being close to achieving some important changes. But Regtech really can, I think, carry a lot of the day on these issues by providing workplaces with assurance that the convoluted and complex award system can be complied with at that workplace level. I'm interested in exploring that with you. Another area which has been notoriously complicated is in the space of financial advice. Now, as a result of gross malfeasance, there has been significant law reform in the financial advice sector. And the arrangements there now are very complex and are about to get more complex as a result of our very important Hayne Royal Commission implementation. But again, Regtech can step into the breach here and help simplify systems and make it easier for small business practices, advice practices, to comply with the law of the land. And that is something that, again, I think Regtech can help with. So as we get towards the next phase of this review reporting, we are looking at the broad scope of issues. Again, we're looking at R&D, which I know is important to many Regtechs. We're looking at whether or not software can easily comply with the R&D tax arrangements. And we're looking broadly at what are the major tax impediments that hold Australia back. And then we're looking at some specific issues about regulation in terms of the consumer data right, regulation in terms of the way that app stores on Google and iOS, Apple arrangements work. So we're looking at a whole range of issues. So I encourage you to engage with me and the committee as we get towards this next report. Once the report has come out, I'm very, very happy to come back and meet with the Regtech participants and the members of the Regtech Association. And I'd like to take this opportunity to thank Deborah Young and her board and your members for all the engagement that you've provided to the FinTech Regtech Committee over these last almost 18 months. Your representation has been very, very strong on behalf of a growing sector, and I'm pleased that our government was able to deliver some substantive change and funding for your sector in the last budget. But there's more to do. We're open for business, open for Regtech business, and please keep the ideas coming. So all the best.
Okay. Well, thank you, Senator Bragg. Our judges are just deliberating and still continuing their investigations. But while that is happening, I thought I'd just take the time to thank everybody for joining us in this afternoon's sessions. I certainly have learned a lot, and I find it quite inspirational, again, hearing from people like Julian Fenwick and thinking about where we've come as a RegTech ecosystem and where we could go. You're hearing about some of the groundbreaking, payments innovation that people like Nick Ogden has managed to drive, kind of hand in fist with the regulators over in the UK and the EU, and getting to explore concepts around how we can better detect, deter, and disrupt financial crime using advanced analytics and machine learning. So I think having all of that, wrapped up with what was quite a brilliant pitch fest with a number of really, really exciting RegTech providers, I think is fantastic. And I can't wait to see what our judges have been discussing, what they've deliberated, and who they've picked as a winner. So hopefully they will come back to me shortly. Okay. Anthony, if I had a singing voice, I don't think I'd be working in emerging technology and innovation at a bank, but I'd ideally be on stage somewhere. So I don't know whether I'll be able to bust out a song, and I don't know whether we're at that time of the day yet to give it a crack. Now I'm getting literally a live feed from the judges as we speak, and it appears as though we have a winner. So I would like to welcome to the stage the winner of the Pitch Fest for Accelerate RegTech 2021. It feels like I need a drum roll or a virtual drum roll. It is Mark Gilman and the team at Theta Lake. Mark,
thanks so much.
Congratulations.
Thank you. This is great. It's such an awesome honor. We really appreciate it.
That is quite all right. How are you feeling?
I feel great. I mean, I want to shout out our engineering and technology team, because they built these awesome products, and we couldn't do without them, the data scientists. So I'm here to kind of help make it look nice, which is great. But those folks are really the stars. And yeah, again, really appreciate the opportunity to kind of present today, and glad that folks found it informative.
Thank you so much, and thank you for joining us live and overseas. It's really, really exciting. I think your pitch is excellent. I think the solution itself is really, really cool, and I know that the backstage the judges were all very impressed.
Great, awesome.
So thank you again, and congratulations to you and the whole team at Theta Lake.
Great, thanks, Jesse. Thanks so much.
No worries, Mark. Okay. Well, I think that actually concludes the public half of this afternoon's event and the innovation stream of Accelerate RegTech 2021. So thank you all for joining us from wherever you are in the world. It's been a fantastic afternoon. I've certainly enjoyed myself, and I hope you have too. Now, for those of you who are members of the RegTech Association, we are going to jump over into the members-only session just now, where we're going to hear from Dave Andrews from Microsoft and Keith Howard, Kylie Rickson, and Lawrence McCourt from the Commonwealth Bank to discuss hurdles to banking innovation. So thank you all, and I look forward to chatting with the members shortly. Cheers.